Welcome back, everyone, to NFT Nation, the most relatable and reliable NFT and crypto podcast in the nation. In today's episode of NFT Nation's Bitcoin Bulletin, I'll be covering a few news stories from the crypto and NFT world that give a positive outlook on the market, since prices have been falling in the past few days. So I hope you all find these stories very interesting, and let's get right into it. So, for my first story, the headline goes: The Luna Foundation Guard buys additional $100 million in Bitcoin and now holds over 42,000 Bitcoins. So, the Luna Foundation, otherwise known as LFG, is a nonprofit organization established in the Republic of Singapore dedicated to creating a reserve protocol for the algorithmic stablecoin USDT, which is like the stablecoin for Terra Luna, and they have purchased an additional $100 million worth of Bitcoin, increasing its total holdings to just over 42,000 Bitcoin. And that's over $1.7 billion, which is crazy to see. According to the dashboard tracking the reserves, the Luna Foundation Guard currently has around $2.25 billion in reserve, like currency, ready to spend, and about 75.5 of their portfolio, or $1.7 billion of which is actually Bitcoin. Another 17% of this is just in the USD coin, which is just a USDC stablecoin, which is equivalent to about around $400 million. And Terra Luna announced in February that it would partially back its stablecoin USDT, which is the Terra Luna stablecoin, with Bitcoin. And Du Quan claimed that the founder aims to purchase over $10 billion in Bitcoin. So obviously they're going to try and reach this $10 billion point as fast as possible. It's really good to see that large players in the market continually purchase Bitcoin as prices are falling, and it really shows that the big players in the game have a strong faith in the power of Bitcoin, especially in the future, since they want to own over $10 billion of Bitcoin. So for my second story, the headline goes: The Belarus-based crypto exchange bans Russian clients amid the Ukraine invasion. So the crypto exchange is called currency.com, and as Russia's invasion of Ukraine continues to draw businesses away from obviously Russia's economy, the Minsk-based crypto exchange is joining the expanding list of companies that decided to withhold their services from Russian residents. So pretty much the latest move follows the company's earlier decision to stop opening new accounts for clients from the Russian market. So obviously, currency.com recently decided to not let any new people from Russia create accounts on their site, and now they are starting to pretty much just stall any Russian accounts on their site. So the CEO of cryptocurrency, I'm gonna get this wrong, it's gonna be pretty hard. Vitalik Kedik, the CEO of currency.com, he's like the CEO of their Ukrainian operations, was quoted in a statement saying that the Russian invasion of Ukraine brought violence and disorder to the people of Ukraine. We condemn the Russian aggression in the strongest possible terms. We stand with Ukraine and everyone who denounces this terrible war. In these circumstances, we can no longer continue to serve our clients from Russia. So since the war's outbreak, currency.com has donated more than $1 million to support the humanitarian crisis in Ukraine, and that is according to the data released by currency.com. So pretty much currency.com and many other crypto exchanges and many other businesses really in the entire world have begun to put their foot down against Russia and against Vladimir Putin's invasion of Ukraine. And honestly, I find this very admirable for them, because they believe, you know what, we're not dealing with Russia anymore. They need to be taught a lesson for what they're doing, and I completely understand why currency.com has been doing this. So for my third story, this one's kind of a big one. The NFT market is showing signs of maturing as sales expand beyond Ethereum, and investors are starting to pile into the new NFT platform, MoonPay. So not only are NFTs being purchased off of Ethereum, so like Solana and many other altcoins, also many people many celebrities and famous people are investing into many NFT platforms. So between January and March of 2022, NFT trading volumes cooled down from a hot start in January, but the number of trades increased significantly in networks that are outside of Ethereum, indicating an expanding NFT market with broadening adoption across the entire ecosystem. According to a recent report released by a DApp Informer provider, which is DApp Radar, they're kind of a little company that looks at everything that's going on around NFT sales and everything. So, pretty much, the company says that the NFT market is currently undergoing a consolidation period after a historical start of 2022. In the first quarter of this year, NFT generated around $12 billion in trades, while the number of sales and unique traders was also on the rise. So, you're seeing a total sales volume go up and the amount of traders that are trading NFTs. So, last month, the NFT space generated around $31.4 billion in trades, which 62% came from the Looks Rare marketplace. So it's not actually all OpenSea, even though OpenSea might be the most famous or most well-known NFT marketplace. It's actually good to see that other marketplaces are coming on the rise to be some sort of competition. And obviously, the NFT activity in blockchains outside of Ethereum are stuff like Avalanche, sorry, and the AVAX token, Flow with the Flow token, Polygon with the Matic token, and Solana with the Sol token. And all of these are just ramping up and they're continuing to see like further growth with their use in the NFT market. This increase in the number of sales taking place in blockchains other than Ethereum is another positive sign for the NFT market. The number of trades made on Avalanche rose by 582% compared to the previous quarter, while the sales generated on Solana and Polygon were up 34% quarter to quarter. So we are seeing a massive move from Ethereum into other blockchains and other coins, because I would say honestly because there's a high barrier to entry with a lot of Ethereum based NFTs. Also, people just don't want to pay these gas fees for Ethereum. It just makes sense why they are moving to other blockchains. This led DApp Radar, sorry, to the conclusion that the NFT space is showing signs of maturing. Like people are understanding, wait, there's more than just Ethereum. I can do more stuff. I don't have to follow the mainstream NFTer, if that makes sense, with just going on Ethereum. I can do my own thing. I can look at other blockchains. I don't have to pay these high, immense gas fees, which is really good to see because it's just giving variety to the marketplace, and it's not just letting one beast control the market. It's diversifying, which is great to see. And to kind of move on to that, Yuga Labs is also improving NFT markets as well. So between January and March of 2022, Yuga Labs, which is the powerhouse behind the Bored Ape Yacht Club, raised a total of $450 million, led by the venture capital firm Anderson Horowitz, which is also involved in Animoca Brands. This is what DAP Radar said as well. So you're seeing a huge, just a huge move into the NFT space from these big players, and especially these big venture capital funds. And honestly, when money talks, money walks. So, I mean, I'm expecting big things to happen in upcoming in the NFT space. And honestly, the Bored Ape Yacht Club creators drew headlines earlier in March after acquiring the IP of CryptoPunks and Meebits, two of the most popular NFT collections previously owned by Larva Labs, and the move established Yuga Labs as one of the most relevant brands in all of Web3. Yuga Lab NFTs currently represent 44% of Ethereum's top 100 NFT collections by market cap. No other group in the NFT space is even close in terms of dominance. So, I mean, if Yuga Labs is raising money and doing big things, everyone better listen up and kind of see what they're doing, because they are a huge mover in this market. This is very bullish for the future of NFTs, since these huge players are continuously investing into the space. And on the topic of investing into the NFT space, so let's move on to these big celebrities in investing into NFT marketplaces. So Ashton Kutcher Gwyneth Paltrow, Justin Bieber, and Snoop Dogg are among 60 new celebrity investors that have put money into the fintech startup MoonPay. So the company lets users buy cryptocurrencies using conventional payment methods like credit cards, bank transfers, or mobile wallets, such as Apple Pay or Google Pay. And this is kind of similar to a Coinbase with more a NFT side to it as well. In November, MoonPay announced its first ever financing round, led by Tiger Global and Kochu, which values the company at $3.4 billion. I mean, this is just another reason to be bullish on NFTs because this is just more and more money pouring into the market, which is great to see because I mean, obviously these celebrities have money to blow and they don't have to obviously they don't have to make money on every single investment they do, but they're trying to make money and they believe in it, so they're putting money into it. And this is another reason why I think the NFT market has a lot of potential because I'm seeing these huge players in just massive amounts of money, like unfathomable wealth. Sorry, going into the NFT space, which just makes me want to pay more attention and maybe invest money myself. So for my final story, this is a pretty important one, especially if you hold any XRP. So Ripple claims another big win against the U.S. SEC. So the price of XRP, the coin that's associated with the fintech firm Ripple, rose a little bit the other day after news of one of the lawyers that's working on the case called a very big win for Ripple. And this is pretty much in an ongoing court battle against the U.S. Securities and Exchange Commission, aka the SEC. So pretty much, if just to give a little bit of background on what's going on, the SEC pretty much is telling Ripple that XRP is a security and they need to pretty much be treated as a security, and Ripple is pretty much denying it and going to court over this. So pretty much the big win is referred to its decision to a decision made by the court handling the case to deny the SEC a motion to reconsider a deliberative process privilege, or a DPP ruling. And the SEC pretty much seeks to have it both ways. If granted, the DPP ruling will have given the SEC the right to withhold documents that Ripple's lawyers say are central to the case. Specifically, Ripple wants documents related to a speech held in June 2018 by the SEC director at the time, William Hinman, to be disclosed. In the speech, Hinman said that Ethereum's native token ETH could not be classified as a security due to the fact that it was appropriately decentralized. The lawyer who shared the comment on this latest outcome is James K. Finlan, a Ripple community defense lawyer who has an extensive experience in the SEC case. So this is obviously a big player in the SEC's case. I believe this information is completely true because he is so close to the case, and there's really no reason for him to lie on Ripple's behalf. The SEC was allowed to redact meeting notes, so Finland's comments about Ripple's big win came shortly after he shared with his Twitter followers that the court had granted a motion by the SEC to redact notes of meetings between SEC employees and representatives of third party in relation to Ripple's case. The news was met with anger with many from the members of the XRP community, with one user saying that it is no surprise considering they don't want to make the government look bad, and another claiming that the judges are working for the SEC. So this is actually pretty funny because the government's like, oh, wait, we're going to get in trouble for what one of our leaders said earlier about how Ethereum wasn't a security because it's properly decentralized. Wait, we're going to look bad with our stance on crypto about how XRP is centralized and it needs to be a security. I think we need to redact these statements to pretty much make our case look better. So the SEC also has a lot of conflicts of interest on this topic. So the news of the court's decisions today came after a whistleblower group known as the Empower Oversight released documents last Friday that the group said shed light on potential conflicts of interest among SEC officials. According to the documents obtained by the group, the conflicts of interest specifically relate to Ethereum and the question of whether ETH is a security or not. The issue is central to the ongoing case between Ripple and the SEC, with Ripple arguing that XRP cannot be considered a security if ETH is not considered one either. So Ripple's pretty much saying, hey, if you believe that Ethereum's not a security, why would you make XRP a security since they're both equally centralized? My kind of opinions on this is that it's good to see that the SEC and Ripple lawsuit is continuing to move in a positive direction. I think it's very good to see that Ripple and many members in the community are kind of pointing the government out on their wrongdoings and pretty much just saying, hey, like, you're saying one thing and doing the other. Like, you need to be accountable for what you're saying. And at this point, the SEC is just wasting Ripple's time. I mean, they're kind of just keep dragging along the ball and chain. They really just need to get to a point whether it's going to be a security or not. And once the lawsuit is settled and XRP is pretty much deemed not a security, which I fully believe it will be, the price of XRP is going to explode. This is just my personal opinion. Obviously, I'm not a financial advisor. I have no idea what's going to happen in the future, but that's just my personal opinion. And if Ethereum is not a security, then XRP should not be a security. Like, flat out, that's really all I have to say on this topic. And it's really just important to understand what you believe is security. And if XRP is decentralized, Ethereum is decentralized, many of these cryptos are decentralized, they should not be considered securities. So pretty much that's all my 2 cents I have for you all today. Hopefully you all learned something in these 4 news topics. If you think some of your friends or maybe a family member will find these news topics interesting, go ahead and share this episode. That'll be greatly appreciated. That's really how we spread this podcast out. It's just word of mouth because we don't run any like ads for it. I don't boost any posts on Instagram or anything like that. I think it's good to have some original organic growth with this podcast. So if you all want to contact us in any way, maybe ask me a question or anything like that, feel free to contact any of our social medias. It is at NFT_nation_podcast. It is the same for our Twitter, Instagram, TikTok, and YouTube. Feel free to contact us on any of those. And if you want to send us an email, it is at nft.nation@gmail.com. Go ahead and send me an email there. I'd be happy to email you back. And yeah, guys, also don't forget to give us 5 stars and share this with a friend, just like I said, and have a good one.